The large and mid cap fund. So first, let's talk about how the war has affected our portfolios, because we do think that this war is obviously very important because India is a big energy importer and energy prices are shot up. There is obviously a lot of impact also apart from energy in terms of fertilizers, helium, sulfur. So there's a lot of challenges on supply chain. What we've done broadly in the portfolio is, first of all, go closer to the sector weights, because this war is such a event driven thing that we didn't want to take a very big call on when it will stop and how long it will continue. Clearly, the longer it continues, the domestic cyclical sectors like banks, autos, cement would be impacted. The defensive sectors will do well, and maybe global sectors will outperform domestic sectors. But as I said, it's not that we are inclined too much on one side versus the other, because this war has already gone on for longer than most people think. So first of all, we've been closer to the index, and second is we're trying to be very conscious of valuation and look beyond the near term. So because of this war, if any stock falls below our fair value estimate from a 3-5 year perspective, we're trying to be as disciplined as possible and keep building positions there, although in the short term it may not work. And therefore, we see this as an opportunity to create good absolute return, because some of the stocks are falling to levels where we think there is very healthy return from a 3 to 5 year perspective. So that's about how we've responded to the war. More in terms of structural views, we continue to believe that the dollar will be weak medium term. So we have a preference for global growth in terms of sectors like global capital goods, metals, etc. We continue to believe that premium consumption in India will be a big structural story. So whether it is premium apparel, aviation, etc., we continue to be positive on those segments. We continue to believe that electrification will be a big theme both globally and in India. So across the power value chain, which includes utilities, financiers, power equipment, we continue to have a reasonable exposure to the value chain. Where we underweight is consumer staples, which we believe will have challenges both near term in terms of raw material prices and impact of this war. But also medium to long term, we believe that as India's demographics mature, there's a lot of competition from regional brands. There's a lot of disruption in terms of delivery like quick commerce. So we continue to be underweight consumer staples, even consumer discretionary. Most of the segments in consumer discretionary we find to be expensive and not great on a risk reward basis. So that is the summary of our positioning in large and mid cap. Just to recap about broader philosophy of this fund, we are fairly nimble. We not necessarily buy and hold. We keep churning our portfolios quite frequently. Our effort, medium to long term, is to try and beat the Nifty large and mid benchmark by a significant amount. So we are benchmark centric. We are not absolute centric. We don't take too much of cash call. We don't take too much of sector deviation. So that is the philosophy behind this fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.